Welcome guys. In this video I'll be talking about the Nzdjpy. So I just found out something recently on the JPY pairs, and been into the JPY index pairs for some time. So Cubans was telling beginners forest podcast. He was telling the guy about why don't he change his pair and something of that nature, like why don't he look into the JPY and something like that it moved fast. So before then I was trading on the Euro, USD and those dollar pairs. So it was somehow slow, very slow, and not that slow, but the pips and what I'm having it's not that okay, but based on what I'm trading it's not that fast and it's somehow slow. So I have to go and check on the JPY first. I check on the JPY and it was interesting, the JPY. So it was interesting. I go more into it. I started like going to check more if my strategies is truly working with it, and I finally discovered that my strategies which I trade the break and retest is the JPY index. The most times works with my strategies properly, and I've seen it and I'm still back testing to get more data on it. This is not all, there's more to this game, you know. I can't say I've seen it all and that's all. No, there's more to this, and I'm just telling you that you just have to check on things. You just have to listen to people that are ahead, that are doing good. You just have to listen to them. You might pick up something from there that you run with, and you will also find something that will be okay with you. You find something that will be helpful to you. You know, that's what I'm telling you. So that's why I'm saying I found this JPYX pairs, and they are kind of like, they are interesting, though sometimes the market might move in its own ways and consolidate and take time before going to your direction, or sometimes it won't even go. That's market. The market is always right, but what I'm saying is that the most times which it works with my strategies, it works perfectly. That's what I'm saying. The most times the Japanese yen works with my strategies, it works properly. So I'm here to show you the Nzdjpy analysis here. So I've made the analysis of the Nzdjpy, the Euro JPY for some time now, so I dropped them off. I just focus on the JPY and some pairs. So now I'm coming back. Let me say fully, I'm back to the JPYX pairs. I'll be checking on most of the JPYX pairs, and I'll be dropping the videos for you here. So today I'll be checking on the Nzdjpy. So the Nzdjpy, let me tell you something about the Nzdjpy I've discovered over these times, which I've tested and get some data about it. So the Nzdjpy is very volatile. It's very volatile to say. It's volatile in the sense that it moves according to how the Japanese yen moves. It moves immediately with the Japanese yen. So, and it's also inverse of the Japanese yen. You know, as I've said, once the Japanese yen is up, all the currencies which are paired with it will be down, and once the Japanese yen is down, all the currencies will be up. You understand what I'm saying? So the NZD moves very fast with the Japanese yen. It moves accordingly. It moves very fast, and it can somehow be fast in taking you out, and it can somehow be fast also in giving you some profit. So when trading these pairs, I'll advise you watch very well your stop loss. You don't bring your stop loss too close to your entry, so it won't take you out before going to your direction. You have to somehow adjust your stop loss. You have to somehow adjust your stop loss, and in adjusting your stop loss, it's going to take you increasing or decreasing your loss size. So in whichever way it will be favorable to you, either you adjust your loss size so you can increase your stop loss. So whichever way, the NZD, this is how it moves. It moves volatile and can quickly be zoom. So let's go here. Let me show you what I have here on my system, the Nzdjpy, what I'm seeing on the Nzdjpy, and I would love to share with you here as my community, so you can also benefit from the knowledge I have here. Thank you guys, and let's go right here into the analysis. Okay, so this is the Nzdjpy. Nzdjpy, this is what we have here. I saw this move. That was, let me go to the to the lower time frame. So I went to the lower time frame on the 15-minute time frame. I wanted taking this trade last night, so it's tapping here. I want to take this trade. The price taps in here to buy to this zone, but something I just have that, like, I have that urge not to enter the trade. I just have that conviction not to enter the trade. So I didn't enter the trade, though something just came to me that I should leave the trade so I can sell. So because that's the main trend. So this particular trend we can see here, this is the counter trend. This is just the counter trend. This we can see, this is not the main trend, so we just want the counter trend. I don't want to trade the counter trend, but if I should enter this trade after I've been in profit. So here is just a counter trend. So this counter trend is going to push us to this area of my point of interest, which I'm waiting for before I can sell. So on the euro, you are on the Nzdjpy. Why we don't, let's check what's happening on the Nzdjpy from the daily time frame. Let's start from the daily time frame and let's know what's happening there. So I'm going on the line chart and I'll delete most of this. I've made this analysis, so I just want to show to you now afresh so you can see everything and how I come about all this which I have done here. Okay, so as you can see, this is the daily time frame, and what can we see on the daily time frame? So here on the daily time frame, if I should zoom in, I'll zoom in more so we can see it clear here. So this is the daily time frame. So on the daily time frame, we can see we are bearish on the daily time frame. So this is where we had our break of structure, so, or the change of character, anyone you call it. So this is where we had the change of character, and this gap which you can see here, there are wicks on the candle. So these gaps you can see, there are wicks on the candlestick. So if I should go on candlestick, you will see that there will be series of rejections here. So that's what I call wicks. There will be series of rejections there on the candle. So that's where, let's go to the candle and check it out what's here. So that's it, there's a series of rejection. You can see that's the rejection. So that's where we break the structure from the uptrend to the downtrend. So we can see after this pullback the market made this pullback, the market went back again. So after this pullback, we can see made a double top. I'll call this, I can call this the double top here, and we can see the break of the structure. So the market coming back to retest on this zone, the market coming back here, you can see it push, you can see the big push. So after the market comes back to retest on this daily break of structure, you can see there is a big push to the downside to this particular zone. So we are bearish on the daily time frame. Most of our analysis will be done on the 4-hour time frame. So on the daily time frame, what I normally come there to do is to check out the trend we are on. You understand what I'm saying? So it's to check out the trend I'm on the trade. So if I should determine the trend of the market from the daily time frame, I'll come down to the 4-hour time frame. Then most of my analysis will be done, most of the work will be done, most of the points will be marked out on the 4-hour time frame. So that's how I do it here. So let's go. This is the 4-hour time frame here, you can see right now. So on the 4-hour time frame, I would love to determine the 4-hour time frame. So we are done with this part. The daily, we know we are bearish already. So we are done with this part. So I would love to check out for the 4-hour break of structure. So I come to understand that the 4-hour break of structure is uptrending, let me say. So and it comes to break on the 4-hour to downtrend, the market will always come back to retest on the 4-hour before going back down. And if it is on a downtrend and it breaks, that is how it is. It's always come back to retest. So I'd love to see the 4-hour break of structure or the change of character here. Then I'll mark out the points, and if I mark out the points, that's where we'll be getting a sell again. Because in my previous video, I made a video on the JPP JPYX, that's the Japanese yen index, that the Japanese yen index is bullish. So other currencies which are paired with this is going to be bearish. So and we can see that happening on the Nzdjpy here. So I saw this trade quite early. Well, this, because of this big push, I didn't know this big push is going to come, so I couldn't rush into a sell. You understand what I'm saying? So maybe those are those days where you just see a big push and you're still going, then the market is going to take you out before it continues to the downside. But from the lessons and from the lows, I learned my lessons, most of my lessons from the lows, that I should wait after this pullback. The market is already trending, is already trading at a high price. You understand what I'm saying? Very high price. So I should wait for a correction back to the upside. So the big players or the big boys will also love the market to, you know, come to a lower price before they can sell from the lower price again. So that's why we can have a pullback or a correction to the a correction back before we can see again a sell or a buy. So that's why we have a correction in the market. So we are having the correction on this move. We know that we are bearish, but we can see that there is a correction right now to the down, to the upside, even if we are bearish. So that's called a counter trend. So this is a counter trend that is going against the trend. Though the main trend is a downtrend, but the counter trend is going up, which is against the trend, and it's a rejection or it's a correction. We are not going to follow, we are not going to fall into the move. So all I'm going to do right now is to determine, as I've said, the 4-hour break of structure. That's where I'm going to mark up. So once you see the market tap in again to the 4-hour break of structure, all we are going to do, we're going to go on a sell again. So let's check out for the 4-hour break of structure, and we are going to leave here to the line chart. So we are going to determine that on the line chart. So this is the line chart, and I'm going to mark it out. Let's mark it out. This is the 4-hour break of the structure. We can see this is the 4-hour break of structure. This is where the market turned bearish. It was bullish from this zone or this zone. So this is where the market breaks and it turns bearish. So I'm going now on the candle. So I'll mark out the wick and the rejections, so we can know where we'll be anticipating for a sell. So this particular zone is my 4-hour break of structure. This zone. So this is my 4-hour break of structure. This zone you can see. So the market, whenever I see the market tap into this 4-hour break of structure, all I'll be doing now is to do what? Is to sell. All I'll be doing is to sell whenever I see the market taps back to this zone, this particular point. So I'm going to sell from this zone. I'll be waiting for the market to tap in this zone, then I'll sell back to the downside. So after waiting for that, waiting for that again, I would love to use my Fibonacci retracement tool also to check, and I'll use my Fibonacci retracement tool to check also for the likely reversal point of this pullback. So that's what my Fibonacci helped me to do. I'll take it now, and I'm going to draw it from the top. Why I'm drawing it from the top to the down? Because I am bearish. If I am bullish, I'm going to draw it from the top, from the down to the top. But since I am bearish now, I'll be drawing it from this side. I'll be drawing it from this side. So I'll mark out my 50% fib retracement zone and my 61 fib retracement zone. That's also a golden point. So you can see the particular zone which we mark out as our 4-hour break of structure is in alignment with the fib retracement zone. So all I'm going to do is I'm going to change the color of this fib retracement zone so we understand what I am doing here, and I'm going to make it blue. So, and I'll delete this fib retracement tool. So you can see that this here, right here, is my fib retracement level. You can see it here. This is my fib retracement level in alignment with what? With my 4-hour break of structure. So that's two confluence. I have some two confluence there which I can sell the market again. So, and I would also love to spot out my area of interest, which is my point of interest, where I have several rejection or several wicks, which I'll call my point of interest. So I can see that that particular zone, which is the 4-hour break of structure, also is kind of like a point of interest here. We can see the market taps in a lot on that zone. You can see the tap in here. So I'm going to mark out that place. I'm going to mark out that particular zone. So you can see there is a tap, several taps on that zone. So you can see several taps on the zone, and I'll go on the candlestick so you can see it more clearer. So you can see there is a wick. Whenever the market taps in there, there's always a rejection at that particular zone. There's always a rejection at that particular zone whenever the market taps in there. So I'll wait patiently for the market to tap in there again for me to sell the market back to a new low. So I marked out this zone also. I'll show you more of my marker so you get a broad view or a broader understanding on what I am doing here. So I'll mark out this last week, this last candle before this pullback, this big pullback, and I'll mark it to this zone. We can see the market also respects the zone. It respects this zone. So after this pullback, what all I'll be waiting for right now, after this pullback to that zone, which I'm waiting for, is to sell back to this zone. So if I'm selling, I'll be selling from there. I'll be going on a short from this zone. So this is what I'm looking forward to on the Nzdjpy. So this is my views on the Nzdjpy, and I'll keep my stop loss high as I have said, reducing my loss size. So this is what I'll be expecting on the Nzdjpy. So if you followed my video, if you follow this video also, whenever the market taps in on this particular zone, you can mark it out on your chart. You can follow my analysis here, follow my workings here. You can also mark yours out, and you can enter for a buy, or you can enter for a sell. If only if we should see the market give us some rejection and some other stuffs here. So if we should see the market give us a confirmation candles and some rejections here, that's when we'll enter for a sell. But once the market breaks above this zone, we'll wait again for a new confirmation before we enter. So for now, this is what you are expecting on the Nzdjpy. So see you in my next video. Thanks for staying by. I love you. Peace.